It was a day of resilience for the Indian markets. Despite dismal industrial output data, markets recovered from the day's low and closed at one-month high on increasing expectations that RBI may cut interest rates and the cash reserve ratio during the policy meet on June 18th. The Sensex advanced 195 points to close at 16,863 and the Nifty was up 62 points to close at 5,116. Asian markets recovered from day's low but ended in the red. European indices were trading marginally higher as euphoria over Spain's bank rescue faded as investors turned jittery over rising bond yields. In India, the latest industrial output data validated S&P's dim view of the domestic economy. Industrial output was flat in April after falling 3.7% in March. IIP growth was, however, lower than market expectations of 1.7% due to weakening capital goods and manufacturing indices. Economists said that IIP data had strengthened the case for a rate cut during the RBI policy meet next week. 11 out of 15 economists polled by Bloomberg expect a 25 basis cut in repo rate next week. Inflation for the month of May, which is expected to be out on Thursday, is expected around 7.6% according to Reuters poll, a tad higher than 7.23% for the month of April, mainly driven by higher food and fuel prices. BSE Realty Index was the top sectoral gainer, up 2%, followed by the Banking Index, up 1.9%. Banking Index was the top gainer after Financial Services Secretary D.K. Mittal said that the state banks would welcome a CRR cut by the RBI during the next policy meet. State Bank of India rose 2%, while private lender HDFC Bank was up 1.9%, and ICICI Bank was up 1.6%. From the realty space, Godrej Properties rallied 5.3%, HDIL gained 3.8%, and DLF was up 2.2%. Major gainers on the Sensex were Maruti, up 3.5%, on reports that the car maker has approved a proposal to merge the group unit Suzuki Powertrain Limited with itself. Tata Motors also gained 3.1% and L&T was up 3.5%. Top losers on the Sensex were Dr. Reddy's down 1.8%, Wipro fell 1.7% and HUL declined 0.6%.